When I am sitting down with a new client and looking at their tax return for the first time, I first looking at sources of income. So, what are their wages, investment income, retirement income, business income if they're a business owner. The other things then I would look for are their capital gains, their dividends. Those sources of income are important to look for.
Yeah, I think when you look at a client's tax return, as Emily said, you look at how they're making money, where it's coming from, right? Is it W-2 income? Is it 1099 income? And those income sources can provide planning opportunities. Also looking at, Emily mentioned capital gains, but where are those gains coming from? Are they being thrown off by mutual funds, right? Is there a planning opportunity to make their portfolio more tax efficient as well? Are they saving or maxing out their 401ks, right? So, really looking at the tax return for planning opportunities, um, and not really making a judgment on what happened the last year, but really looking forward to trying to make the next year better for the client. Sometimes, yeah, it's a pain point where they've gotten hit with large capital gain distributions from mutual funds and they're wondering what happened, right? Why did they owe so much more tax this year versus last year? What occurred? And they're coming to us looking for solutions to those problems. Yeah, and I mean the worst case scenario sometimes with mutual funds, they'll throw off a capital gain distribution and actually be down for the year. So you kind of get the double whammy of a loss because of market performance, and then you still owe the taxes, and that's when it gets really upsetting.
So, yes, I do look at multi-year. Specifically, if I ask a client, has there been any changes in income within the past 3 to 4 years? If the answer is no, just I earn what I earn and I get some bonus income, or my pay goes up, 5 to 10%, whatever per year, then I won't do that. But if they're more of a 1099 employee or a 1099 business owner, and their income fluctuates, right? One year they make a lot more, maybe last year business wasn't as good. I will say let's look at multiple years. Let's compare and contrast what went on in those tax years, and then that will open up the conversation for some planning opportunities to maybe help even out some of that income, or come up with ways to save more in certain years for retirement, or build a sinking fund, or a slush fund, so to speak, so that that could help even out income, so that we could basically, help automate some of these contributions and get similar amounts every year. It just depends on the client's needs, really.